Today, what I want to do is talk to you about the cycles and the systems that make up the hunter economy. So the cycles are the changes over time, the things that we habitually look at when we're analysing an economy. What's employment doing? What's unemployment doing? How is this housing sector going? While the systems are the underlying components of the economy and their interactions. And really, a cycle is very much dependent and comes out of the systems that underlie it. So I thought, I think we often focus on the cycles without really having a good look at the systems which underlie them. And one of the things also that I really wanted to highlight is that we tend to look at things in quite a linear way when we're looking at the cycles, whereas really what we're dealing with is a complex system when we're dealing with an economy. So we can't hope to ever stand up here and say to you, this is what's going to happen if I do this X with this, Y is going to result. It just doesn't work like that. And so essentially understanding the systems and the key system components, we can understand what we have to fertilise or build or create to then generate more organic growth, which leads to the sort of outcomes that we want. And knowledge and looking at systems helps us understand what things we do have to fertilise. So it's that perspective that I'm bringing today. And it's not possible to go into the real depth of it, obviously, in a presentation of this length. So my aim is to look at the current state of the regional economy. I'll be doing the usual analysis there, and then taking a brief look at a few underlying system elements which play a part in shaping the cyclical movements, as they are, as I said, really inextricably interrelated. But before we begin, a brief review of the macroeconomic context, the cyclical elements which are exerting significant influence on the regional economy. As we always say, it's not possible to understand the region without understanding the context that it's put within, especially in what we now have, which is increasingly not just a buzzword but a reality, and that is a global economy. So China is continuing a period of considerable adjustment, moving away from growth fuelled by fixed asset public investment. So basically, it's the cranes putting up the buildings which have been fuelling a lot of the demand for commodities. They're changing the way that they're doing things now, and they're moving to more consumer-led imperatives within their economy to build growth. So they're moving away from that fixed asset public investment. Europe is still unsteady despite central bankers' continued pledges of support, and I've seen that some of those pledges have really become fairly unequivocal pledges, which has provided some confidence. US housing and employment are showing some signs of recovery but are still weak, and the US economy is facing an imminent withdrawal of fiscal stimulus. The mining boom isn't over, but it is moderating. And monetary policy is being used, as we've all heard about those interest rate cuts, to stimulate demand. But the Australian dollar remains high, which continues to be a real constraint on domestic business activity. And household debt also remains very high. So if we're not seeing that flow through immediately from those interest rate cuts, it's because the latest Reserve Bank figures put household debt at approximately 150% of disposable household income. We have been deleveraging, but not nearly enough at this point. So these broad influences set the scene for looking at the regional economy, and I'll do this by considering the labour market, where we're at in the cycle, and looking at a few elements of that system that I was telling you about, with a similar approach to the economic growth components of business investment, household consumption and housing investment. And then I'll summarise the economic outlook and identify some key systemic issues and challenges for the hunter region. So first of all, I'll look at the cycles in the labour market and where we are at the moment in terms of those key employment indicators. In this graph, I've chosen to concentrate on the last year. A lot of the time we provide a longer perspective, but I wanted to show the softening in the labour market, which has been occurring over this period. The downward slope shows that there has been a decline in numbers of employed regional residents. And this most likely reflects the relatively uncertain global outlook, with falling commodity and export prices also beginning to play their part. I don't mean that regionally the falls in employment have been in mining. That's not the case. But the less optimistic outlook for this sector is having an influence throughout the economy, alongside other issues such as that continued high exchange rate. The upside is that moderation in the labour market conditions should work to contain labour costs in industries other than those directly affected by the current strength in the resources sector. And that's actually a good thing, because as we have easing monetary policy, inflation is going to be one of the things that we need to keep an eye on. Also, lower demand from the mining sector will free up labour for employment in other sectors such as construction, where there have been acute labour shortages. The downside, of course, of the softening demand for labour in the region is the increasing unemployment rate. We can see these increases over the last year, which once again I've shown on this chart. But in August, the regional unemployment rate nevertheless remained below the national rate and similar to that in the state. So it's certainly not catastrophic movements at this point. It's just a general softening to reflect the structural adjustment which is now occurring in the economy. Nationally, there's been considerable discussion about the end of the resources boom, with commentary now suggesting that mining investment will reach record highs as a share of GDP in 2012 and 13. So that's earlier than we expected. And alongside the weakening terms of trade, this revised forecast for the longevity of the boom has impacted upon the strength of the economy, and we can see that in these figures. The falling employment numbers and increasing unemployment rate have occurred in the context of small falls in the participation rate, regionally and in the state, underlying the general softening of conditions over the last year. Now, these are the industries where employment losses have occurred. With manufacturing, we can see leading the bill there. Now, I stress that we can't look at the numbers here because there are some issues with sample volatility, and raw numbers aren't the way to look at this data. But they do indicate a trend, and we can see that manufacturing falls were followed by professional, scientific and technical services and education and training. Now, these cyclical movements are of concern given the systemic importance of all of the industries making up the knowledge-based sector, and also given the importance of manufacturing. There's a lot of debate about this. Should we just let it go? Is it something that we need to nurture? What do we do? Do we return to protectionism? Well, I think that's been ruled out. But manufacturing is important because it allows the region to maintain diverse skill sets which can be deployed in other developing sectors. And once you lose those, you lose that essential part of the economy. And it also allows us, with having manufacturing in the region, to retain production capabilities and resources which are vital to innovative capacity and also supply chains. Our research shows that the goods producing sector is one of the most innovative, and they're also a really crucial element of most supply chains. So if you lose that manufacturing, you're all of a sudden dependent upon suppliers in other regions and other nations, which can provide a bit of vulnerability for your overall economy. So it is an important sector, and I'll have a look at some other structural or systemic issues shortly. But from a cyclical perspective, it's evident that losses in mining employment have not yet exerted a major influence on the regional employment figures, and we can expect to see this as more of a factor in the months ahead. Types of employment are also important for understanding current movements. At present, we use a dichotomy of full-time versus part-time employment, and we can see from this chart that part-time employees, the black bars underneath, suffer from entrenched underemployment. And we can see that it's very sustained there, to the point where this is actually a structural characteristic of the regional labour market and constrains things like job security, earning and sentiment within the region. Part-time employment is often the first to decline when the labour market softens, as is evident here, but we can see that in August, the full-time employment actually started to decline as well. So that's an indication of that softening that we were talking about earlier in the labour market, when your full-time employment starts to decline. In the years ahead, the part-time, full-time division will probably become less descriptive. as businesses move towards more horizontal structures. Because one of the things that we look at in innovation is the way businesses are really dealing with their people in different ways. And one of those ways is to have flatter management structures and more autonomy with the staff, who aren't necessarily being judged according to how long they sit in that seat for each day, in other words, by time spent, which is reflected in full-time, part-time, but more in objectives and jobs done. So this dichotomy may not be something that bears up over time, and we'll have to have a look at the way we analyse this, because there is some possibility that those people that we now call part-time, under the new management structures, may become even more disadvantaged. But we've yet to see that. But for now, the recovery of both types of employment will be heavily dependent on increased activity in businesses outside of the resources sector. And on an optimistic note, in September, businesses' intentions to recruit staff were positive and higher than they had been for the past 3 quarters. We can see that here, it's above the earlier parts of this year. So generally, the labour market is showing signs of weakness, but is nevertheless still relatively strong. Now, I'll briefly touch upon some systemic or structural issues relevant to the Hunter labour market. We've already touched on issues related to the nature of employment, so the part-time, full-time, and also the importance of maintaining and growing key industry sectors. So I talked a little bit about manufacturing and about the knowledge-based sector, which is widely touted as the future of most regions. And youth unemployment is another phenomenon, so another systemic issue that requires understanding and attention. We can see here, the blue line, that we've got a very volatile indicator. It moves around a lot, and part of that is sample size. So once again, we look at the overall trend, and we can see that the unemployment rate for the 15 to 19 age group is approximately 10 percentage points higher than the rate of the total population. The 15 to 19-year-olds do certainly make up a small proportion of the labour force in the Hunter and in fact throughout the nation, but they are probably one of the most vulnerable groups in the region, so it is an important issue. And this chart shows the related issue of year of school completed. These 2011 census figures, and I'm looking at the light blue parts of the chart here, we can see that the 52% in the state had completed Year 12 or equivalent, while only 38% had completed Year 12 in the region. Now, this is partly a legacy issue, but it continues to be an issue for the region. Although representations of qualifications can be very one-dimensional, as really what we're looking at when we're looking at the education of our people is about the quality of that education. Because if we're going to have an innovative labour force, having somebody with a degree is all very nice, but if they haven't got that ability to come up with new ideas and to do things well within a changing organisation, then fundamentally that degree can mean nothing for your regional growth. So we're talking about quality, we're talking about diversity, and whether the qualifications match the requirements of the industry base. But nevertheless, the qualifications figures do provide a marker for an area that continues to require top priority in terms of the focus not only of policymakers, and it's certainly a policy issue, but also of business, because businesses are the key providers of opportunity. And in the Central Coast, where I'm involved in a thing called the Innovation Plan, one of the things that we're heavily involved in is making sure that there are some partnerships between social enterprise who are providing job placement opportunities and businesses who can provide that and facilitate that, because it's actually in everybody's advantage at the end of the day, because it enhances the human capital in the region, which they can then draw upon. So those systemic issues concerning unemployment and human capital give rise to inequality, and the social and economic costs of inequality are very high. I know that in the United States there were some staggering figures that I saw in the paper recently about 90% of their wealth being shared by something like 1% of the population. It's a very unequal society, and there are a lot of social costs that go with that, and also a lot of brakes on growth that come with that. So these systemic issues of qualifications and youth unemployment can lead into that inequality. And there are also high risks associated with youth disadvantage and underqualification in the context of an ageing population, because almost universally throughout the developed world we are looking at an ageing population, so we really need the youth coming through to provide that earning capacity and to pay their taxes. And we also need to work at raising the level of lower skilled workers if we're to compete in the world of personalisation of services, one of those big meta trends. So increasingly services are not just going to be of your standard variety, but they're going to be more personalised, and people are requiring higher level, and you need a pretty high standard of human capital to deliver that. So there are impacts upon your knowledge base, which then create a foundational weakness. Another systemic issue is the degree to which the region has viable clusters in industries that will be the major beneficiaries of the rollout of the NBN and the growing importance of the digital economy. We are in the midst of major systemic change in the way that we do business globally, and that's represented by the rise of the digital economy. And the graph here shows these industries as identified by Phil Ruthven in his report, Australia's Digital Futures to 2050. And I'd recommend to everybody in the room to read that report, because it really does provide a good overview of what's going to happen to industry sectors in the years ahead. And the region is relatively thin, we can see here, compared with the state. That's what these figures do. They're comparing the New South Wales and the Hunter. And we're thin in the areas of information, media and telecommunications, financial and insurance services, and professional, scientific and technical services. But we're certainly reasonably strong in most of these other sectors or industries, which are going to be some of the most affected by the rollout of the NBN. And so we're comparatively well advanced in exploiting the opportunities provided by the digital economy. But to realise these opportunities, we need entrepreneurship. A lot of growth in a business and in a region is created by small business startups. And a lot of the movement in this area is going to be around those small business startups. So it's essential that we really, through our educational systems, promote that entrepreneurship and also collaboration, because a lot of small to medium enterprises, which predominate in many regions, including the Hunter, won't be able to do this alone. They will need a region-wide enablement support framework in order to allow them to start taking advantage of the new utility that's going to be delivered. And if they don't take advantage of that utility, particularly in things like retail, then they may find themselves left behind in the race for customers, which is now increasingly all done, or not all done, but certainly a higher proportion of it is done over the web. So it's a really essential thing that the region needs to get on top of pretty quickly. And I'll also look at this a little more closely when we're looking at regional businesses. So going on now to look at those regional business conditions and investment. So we talked about the mining boom and the fact that key commodity prices for Australia remain significantly lower than earlier in the year, even though some ground has been regained in recent weeks. Coal has not been immune to this, with the spot price falling steadily, but more modestly than for many other commodities for most of 2012. Despite this, we can see here that regional coal production has continued to increase, as have regional coal exports. And that's largely because a lot of export is done on contracts, but it's also because demand is definitely going to be sustained and is sustained at present. The influence of China entering a period of structural adjustment and moving away from fixed asset infrastructure as the primary economic stimulus means that demand for commodities, including coal, may moderate, but will still remain considerable, supporting Hunter coal exports for some time to come. So that's good news. But we still have to look at the issues which are increasingly becoming centre stage again, and that's of productivity and investment in the non-resource parts of the economy. With investment likely to increase if profitability and trading remain good, as we can see here, our indexes showed that profitability and trading were good in September of this year. Capacity utilisation of business overall which I haven't shown on the graph, was about 77%. So there is some room to move without significant capital outlay, but this will be soaked up pretty quickly if easing monetary policy continues to create breathing space for other parts of the economy and sentiment improves. Private and public investment, which I'm showing here in non-residential building approvals, which is often considered a real pivotal indicator for the region, remained subdued in June 2012, but there was an improvement in approvals compared with the same time last year. So that's a positive sign, especially given that the likelihood of significant public spending is very low, apart from some investment locally in some infrastructure projects in the Newcastle CBD. These projects, such as the court precinct, have the potential to have significant stimulatory effects and also provide system-level improvements in terms of quality of life for residents and increased business utility. So that's certainly a very good thing happening in the region at the moment. But alongside this potential upside for commercial investment, commercial vehicle registrations remain weak after the withdrawal of the stimulatory investment incentives post-GFC. So these data suggest that many businesses do remain risk averse and credit is still constrained in some sectors. But looking ahead, intentions regarding capital expenditure, which we can see here on our index, are positive and forward orders improved compared with the previous 2 quarters. So generally the data is representative of the overall business climate, with business conditions reasonable but not buoyant and expectations for the future cautiously optimistic. With that cautious optimism evident in this chart, we can see that it's actually entering positive territory there after a bit of a downturn. And this means that expectations for the regional economy entered a more positive stage in our last survey in September. Now, these are good signs, but developments in debt-ridden Europe and the way in which the US deals with the looming withdrawal of fiscal stimulus, this is a big issue, I think, for the US economy coming up that will filter through to our economy gradually. And these will be really significant factors in shaping these indicators that we've just looked at in the months ahead. And more generally, the ability of the regional business community to increase productivity. And that's a well-used word, by being innovative, another well-used word, and embracing the opportunities presented by the infotronics age, and specifically the NBN, will continue to determine the level of investment over the longer term. So that's looking more at the underlying system, which I'll go on to do now in the context of regional businesses. I'm going to look at some of those systemic issues, such as regional innovation. We collect data, that is the HVRF collects data, about regional businesses that introduce new goods and services during the last 12 months. And we can see that innovation using this measure, the bottom of the scale here is 25% of businesses, so we're at about hovering around 35%, something like that. So we can see that that's actually a pretty buoyant kind of figure. It's certainly very favourable in terms with, in comparison with national benchmarks. And it's a good sign, despite the slightly lower proportion that we can see here in September 2012. The figure came down a little bit. However, the data needs to be viewed, I think, it's interesting data and it's certainly important to monitor, but we have to view it in the context of overall innovation system and whether it's generating diversity based on this concept that I'm coming across a lot, which is called related variety. And it means that we use existing skill sets and capabilities that are already within the region to build specialisation and diversification, not just innovating without system improvement and strengthening. As part of my research, I'm looking at some models of systems that make understanding and describing systems more easily. And essentially, you're looking at the interactions between business. So collaboration is really important. You're looking at the horizontal and vertical networks of business, and then you're looking at their interactions with the knowledge generation. It's called a knowledge generation subsystem. So business doesn't operate as an island, it relates to that knowledge generation subsystem. How do you relate to your university? How do you relate to your technical colleges? Are they actually partners in your development? Are they providing the staff you need? Are they giving you the know-how to look at emerging trends, that sort of thing. So it's that interaction between businesses and also between other parts of the system that are really important, and you then put that in the context of a policy framework. And I'm also looking at the fact that you also need to put that more deeply in the context of your surrounding socio-economic system, because things like your human capital are really important to the way that your innovation system develops. So basically we do look like we've got a fairly innovation active community here in the Hunter, but we really need to take a more system level approach. It's very hard to do that without a really comprehensive diagnostic. But one enabler of innovation is the use of technology, and we've some data in this area, which I'm showing you here. And it suggests that regional businesses may be underutilising web-based tools, shown here on this chart, with only 1/4, we can see that percentage here, of regional businesses using a website to take orders for their goods. Even industries threatened by digital competition, such as retail, can use technology to support growth and to revitalise their business models. I know a lot of high street retailers now have an online presence to diversify their business model, and it's increasingly part of the population of the retail web population. So we see a real diversification there. The web does not necessarily mean death and destruction. It just means that you have to move in the way that you do business. So you're using that technology to revitalise business models, drive customer collaboration, optimise supply chains, and again access to information vital to remaining competitive. So one thing that's often said is that if you can spend an hour a week just sweeping the web to see what's going on in your industry, that is time well spent. And that's what some of this new technology can give you in even greater detail and abundance. Our regional systems endowment with educational resources, such as the university, will be one of the most important assets in this regard, as it is in many other areas of innovation and industry development. That is in the regard of enabling businesses to understand the trends and to use technology effectively in their businesses. So finally, now looking at household consumption, the high Australian dollar and some of the most competitive pricing experienced by consumers are factors that underlie the 5 consecutive, and we can see those here, the 5 consecutive quarters of growth that we've seen in motor vehicle registrations in the Hunter and the state. The growth in the Hunter has been higher than in the state overall, but most likely reflects the higher car dependency of regional residents. This indicator is not really representative of the overall consumer sector, with the real value of residential approvals in June 2012 lower than at the same time in the previous year. Recently released monthly figures suggest continuing weakness. There's evidence that regional dwelling occupancy rates are increasing and affordability constraints continue to weigh heavily, especially in a region such as the Hunter, where annual disposable income is relatively low compared with many parts of Sydney, but where, as we'll see, house prices are beginning to come into positive territory, but we've yet to see whether or not that will be sustained. Some improvement in the housing sector is supported by the data on home buyer sentiment, which we can see here and which we collect as part of our research. And we can see that 9% in September expected to purchase a home, whereas that was 5% in the previous year. So that's a really positive trend, showing a rebound of sentiment after a very constrained few years. Appliances were the only category of consumer investment item where expectations to purchase had not risen from a year earlier. And we can see that almost a third of residents expected to take a holiday in the near term. And a lot of these holidays, because of the Australian dollar, will continue to be enjoyed overseas. So the challenge for the regional businesses will be to attract those growing Asian middle classes. I guess that's their real systemic adjustment that's happening at the moment in that sector. And another positive sign for consumer sentiment was the entry into positive territory of annual change of house prices in the Hunter, and the figures we have, they're the most recent figures available at the moment for the region, are for March 2012. And the wealth effect can have a really significant flow-through effect into the whole economy, so this is going to be something to watch. And the return to real price growth in the Hunter possibly marked a turning point for housing demand and construction activity in the region. But we can see here that the rate of growth in rental rents has actually started to plateau. And I'm not showing it here, but the state figures show that rents actually went into negative territory in June of 2012. So we've probably got a situation where that part of the housing sector has reached affordability constraints, and rental returns may continue to plateau over the coming months. And despite some positive notes in the housing sector, consumer sentiment does remain relatively pessimistic, with consumers expecting the regional economy to worsen over both the next 3 months and the next 12 months. Before summing up, I'll just have a brief glimpse at the systemic issues concerning consumers, because they're just very highly relevant to every business. They're perhaps systemically more cautious. They're informed and driving increased emphasis on stakeholder engagement and interaction between community and business, forcing increased accountability. They're global, driven by technology, concerned about sustainability. They're ageing and increasingly urban, driving good and service diversification. It's shown that if you've got a more urban population, they tend to demand a more specialised range of goods. And they also place a greater emphasis on services and the personalisation of those services. So summing up the Hunter regional outlook, we can see that the labour market has softened over the last 12 months, but remains quite strong. Commodities exports continue to grow, despite some signs of moderation in resource sector investment. The non-resources business sector is relatively weak, but there are some signs that we've seen of improvement. The consumer sector remains subdued, despite some signs of life in the housing sector, and the global context remains critical, with the continued high Australian dollar a persistent constraint. So the outlook for the Hunter economy generally is relatively optimistic, provided there are no significant global shocks. Coal exports are likely to remain at high levels, and concurrently, easing monetary policy is providing breathing room for other parts of the economy. And to have a final look at those system elements, we can see that consumers are increasingly cautious, informed, ageing, urban and global, with increased emphasis on service. And the more regional businesses embrace these shifts, the more successful they'll be. Business innovation needs to be integrated and strategic if regional performance is to be enhanced, and enabling the effective use of technology is a really core issue. Building capacity in key sectors is essential to maintain a diverse knowledge and production base, and reducing socioeconomic inequality and youth unemployment, as well as improving human capital, will provide a stronger foundation. Thank you very much.